This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets were largely lower Friday, except for Japan, which continued its record-breaking rally, while investors awaited a slew of economic data out of China, including inflation and trade numbers for December. Both the benchmark Nikkei 225 and Topix are at their highest levels since 1990, having surged in the past week. The Nikkei popped 2.1% on open before paring some gains, while the broader Topix was up 0.53%. In Australia, the S&P/ASX 200 opened 0.38% lower, while South Korea's Kospi slipped 0.15% and the small-cap Kosdaq was down 0.65%. Futures for Hong Kong's Hang Seng index stood at 16,236, pointing to a weaker open compared to the HSI's last close of 16,302.04. Overnight in the U.S., all three major indexes ended Thursday close to the flat line even as U.S. inflation for December came in higher than expected. December's Consumer Price Index report came out slightly higher than expected, reflecting a 0.3% increase in consumer prices for the month, pushing the annual rate to 3.4%, compared to the 3.2% expected by economists polled by Dow Jones. The Nasdaq Composite closed at the flat line, while the Dow Jones Industrial Average eked out a gain of 0.04%. The S&P 500 edged lower by 0.07%. Although earlier in the session, the broad market index briefly traded above its record closing high of 4,796.56. CNBC's Pia Singh and Brian Evans contributed to this report. Inflation rose at a greater than expected pace in December. The Consumer Price Index increased by 0.3% last month from November. Year-over-year, CPI was up 3.4%. Economists polled by Dow Jones expected CPI to have risen 0.2% month-over-month in December and 3.2% year-over-year. However, so-called core CPI, which strips out food and energy prices, was in line, pointing to a possible easing of pricing pressures. Slightly hotter than expected inflation data from December is unlikely to knock the Federal Reserve off course from cutting interest rates later this year, economist Paul McCulley said Thursday. Even with the Consumer Price Index showing that inflation rose 3.4% from a year ago, McCulley contended that the Fed's policy pivot is unambiguously in. The next move is a cut, and it's going to be a series of cuts to take us back to neutral. That's the theme the market is working on. I think it's the right theme and the day's data doesn't change that really at all, McCulley said during an interview on CNBC's Squawk on the Street. Nevertheless, stocks fell following the inflation news. It's noisy in the data. It's noisy in the market. But we're fundamentally in a soft landing with a pivot already in rhetorically, and we're just waiting for it come in reality, timing, pace and magnitude, McCulley added. Bitcoin miners gave back earlier gains as the price of the cryptocurrency retreated in volatile trading, after the Securities and Exchange Commission's approval of the first U.S.